So my partners and I own several apartment complexes valued at over $350 million. Here's 4 things we look for in every deal that we buy. Number 1, cash flow from day one. We focus on value-add multifamily properties. And one of the biggest reasons is because they provide cash flow starting from day one. If you compare this to new development, there's typically a period of 2 to 3 years where there's no cash flow at all. During this time, you're paying the carrying costs, which puts pressure on you to sell the property as soon as it's completed, even if the market isn't ideal. With value-add multifamily, on the other hand, you can generate cash flow for our investors almost immediately. For example, in our latest deal, there's an immediate cash flow component. We're projecting cash flow in year 1 for our investors. That's a huge advantage because it gives us flexibility. If the market isn't in a good place to sell when we're ready to exit, we can wait it out. Meanwhile, the property is generating income, paying down debt, and building equity over time. This reduces risk and provides a stable foundation for long-term returns. Number 2, conservative underwriting. So anyone can make a spreadsheet look good, but at the end of the day, underwriting needs to be grounded in reality, and we take a conservative approach when evaluating deals. For example, in our latest acquisition in Atlanta, we're using very high economic vacancy in years 1 to 3 just in case we need the room. When it comes to our exit projections, we're using a 5% cap rate for 2029, even though the CoStar projects a more aggressive 4.6 to 4.75% cap rate. We also take a conservative approach to rent growth. While the market projections in this area are showing rent growth at about 4% per year, we're modeling just 2.9% average. This ensures that even if the market underperforms slightly, our deals still make sense. By purchasing at better than market prices and projecting lower than market rent growth, we're building in a margin of safety that protects our investors. The third thing we look for is the right debt. And this is one of the most important factors in any real estate deal. It's not just about the interest rate, it's about the type of debt, the loan to value ratio, and the terms of the loan, including the interest rate. In 2022, it was a very different lending environment. To make deals work, you had to use high leverage of 75 to 85% loan to value paired with variable rate short-term bridge loans. Often there was a construction component, so it could take the leverage all the way up to 100%. And with competitive bidding, you push cap rates down to sub 5%. You also had to make aggressive rent growth assumptions to make the deals pencil. But you were getting those things at the time. You were seeing all of these things. At the time of recording this, the landscape has changed. Now we're seeing lower leverage debt, typically 65 to 75% loan to value, paired with fixed rate agency loans for 5 to 7 year terms. Cap rates have adjusted to around 6%, and rent growth assumptions have become much more conservative. This environment makes it less risky to invest. The fourth thing we look for in deals is sufficient reserves. This is especially important in value-add deals where the strategy is to make improvements to the property, increase the rents, and ultimately boost cash flow and valuation. Reserves are critical for several reasons. First, they allow us to fund construction projects without running into financial strain. Second, they give us a buffer for potential vacancies as we turn over units and bring in new tenants. And finally, reserves protect us against unforeseen events, things like unexpected repairs or shifts in the market. By having sufficient reserves, we're able to execute our business plan effectively and ensure that our properties continue to perform for us and our investors. If you have any questions or would like to learn more about investing in multifamily, specifically our deals, head to nighthawkequity.com/intro and book a call with us. We'd love to speak to you. Our team has over 34 years of real estate investing experience. We'd love to learn more about you and your goals and see if what we offer is a good fit for you. So head to nighthawkequity.com/intro and I'll see you next time.